Good morning and welcome to the first episode of Trading.com Weekly Market Update for 2026. Peter, welcome back.
Good morning, Andrew.
Happy New Year.
Happy New Year to you too, mate. And I'm looking forward to a great year together.
Yeah, so it's been a few weeks since we last spoke, but plenty of activity. The end of the year was a little bit tame from the equity markets perspective.
Yeah.
There wasn't too much going on, but once we kicked over into January,
Yeah.
it was all systems go again.
Absolutely. It's been an incredible start to the year if you're looking at equities, and commodities didn't take a breather.
No.
They were absolutely game on, and it's just been extraordinary. We had silver at $84 an ounce, and I'm thinking it's got to be probably first quarter. By the end of the month, I'm thinking 92 to 95. It's up $2.60 this morning.
Yeah, no, it's been a pretty incredible run. So let's just look domestically first of all. The CPI data came out last week. They were expecting, the previous one was 3.8, expecting 3.6, came in at 3.4, which is a good thing, but you would think clearly it is still too high for the Reserve Bank to drop interest rates at this stage.
Well, soon, we might get a cut by end of second quarter. We'll just have to wait and see. But I think the first half of 26 is going to be electric across so many different fabrics of the economy and global geopolitics.
Yeah, there's going to be plenty of activity offshore, but that's for sure. So Aussie dollar, once again, it has kicked up a little bit in the last few weeks. Yeah. Not massively. It has been range bound for quite some time now. So, plenty of other currencies with plenty of more volatility.
Yeah, sure. Absolutely. Again, we'll just have to see where that US dollar trends and what rate policy is going to come out of the Fed.
Yeah, well, that's the big unknown at the moment.
They want 100 basis points for President Donald J. Trump and Scott Bessent.
Yeah, we'll see. Jobs numbers, US. They were down. It was an up figure, but down a little bit more than expected, but not by a large margin.
No, hit 50,000, and what we saw a revision as far as November's numbers from 64 to 56, and I thought that was interesting. And also the unemployment number from 4.6 was expectation, but it's actually had a pullback, so it's only at 4.4%. And the US economy, Andrew, is absolutely on fire. The Atlanta Fed models come out 5.4% expected GDP growth in Q4 25.
Yep.
So that's already passed. So if that hits those numbers, boy, oh boy.
Yeah, it's a big number.
Oh, for an economy that size.
Yeah, for sure. Commodities have been the talking point for a long time now. But let's look at oil first of all. Obviously, there's been all the situation in Venezuela over the last few weeks, which caused a little bit of turmoil. Iran, there's plenty of activity on Iran at the moment as well. So the oil price, it has ticked up slightly, but not significantly.
No. You've got Brent sitting, that's WTI, Brent sitting around about that 63 and a third, 63 and a half. It could edge higher with, a geopolitical risk premium built in, war, all that. The unknown, Andrew, is I don't expect Venezuela to be a big push to the upside from a geopolitical standpoint because it doesn't produce enough, and China's the main recipient. Yep. And I think there's strategies in place there why they've taken Venezuela. But the other side, of course, is Iran is a real powder keg, and that creates much bottleneck. And the Strait of Hormuz, 37% of oil travelling through that, the Persian Gulf. That if that becomes a choke point, then obviously we're going to see crude rally much, much higher. So this is all, again, how that is all interpreted from the market and whether we do see that materialise.
Yeah, I know. There's plenty of oil. But as you say,
you've got to get it out.
If the shipping becomes an issue, then yes, you'll see a definite spike, which is sort of interesting that we're probably not seeing that in these prices just yet. So
no, I don't think any war premium or any issue, and that could rally very, very. I'm talking rally in 6 hours.
Yeah.
Not there's not a 6-week program.
No, it changes quickly.
Yeah.
The other commodity, which has been, once again, we've talked about this late last year, but it's pretty incredible. You look at these charts, particularly silver, that run up from mid-November is extraordinary.
It is. It's just absolutely on fire. I've gone out to. I've said on global media, 120 by the end of the second quarter is my forecast. That's my personal forecast. And 92 to 95 by end of January this month. And we're up $2 since that chart. We're up $2.50, and gold's up $51 this morning. And Asia is eating this stuff up on Monday, the 12th of January.
Yeah. I know.
And it's, what is it, 20 past 11 Sydney time.
Yeah, so what's that, a 1 year chart, but both, it's pretty...
Silver's up 160% for the year.
Unbelievable, yeah.
That says the story.
Yeah, it was dormant for a long time.
Oh yeah, very, very true.
It's having its day in the sun at the moment, that's for sure. Finally, more of a history lesson here. This S&P total return, so this includes dividends as well, but pretty extraordinary where you get very few multiple down years.
Well, and you've coincided that with when you started school, 1931. So that's very good. But yeah, when you're looking at the Great Depression there, and that's understandable, those drawdowns over that period, you're looking again at 38 for the Second World War, and then the early time frame of the early 40s. It's a long time between drinks, and then you've got the .com, which naturally it was overheated. But since then, Andrew, 25 years, it's hardly had a pullback.
Yeah, and it's pretty extraordinary when you look at the GFC back in 2008.
Yep.
How that didn't last even longer from a down equity market.
You bet.
But then again, I suppose if they throw enough money at it, the central banks, the equity markets just eat that up. So
exactly.
So I've had like three, and last year from the S&P, I think it came in at roughly around sort of 15-16%, which is a terrific return. But plenty of other markets were a lot higher than that, other equity markets.
South Korea, some of their indexes are up over 100% for the year.
Yeah.
So Japan's been extraordinary, up 30,000 to 50,000 was the low, to 50,000 plus for the high for the Nikkei.
Yeah.
So, what's interesting there is you've got a 69 handle at the moment. It's 69.66 for the S&P. So we're at all-time high. You're only 20 points off, or 15 points off, 10 points off. 69.78 is the all-time high.
Yeah.
There is, I think, you'll probably break 7,000 today, and the way it's moving, we could see an 8,000 handle for the S&P end of first quarter. It's accelerating, Andrew.
Yeah, and once again, with a decent economy, interest rates potentially coming down.
I'm being serious. I know you laugh at me. I can only tell you what Scott Bessent's saying. And he's the Treasury Secretary. He's calling for a 100 basis point wipeout. The president wants more.
Yes.
So we can say, well, is it achievable?
Yeah.
Well, he says there's so much room there and so much excess capacity for the Fed. We've got a big debt and we need to get cheaper interest rates.
Yeah.
And I wouldn't like to be arguing against Scott Bessent because he seems to be very persuasive.
Yeah. And also the interest rates, we haven't got it here, but that 10-year is not coming down at all.
No.
So it's still around that 4.18.
4.17.
Yeah, okay. Which, if anything, it's crept up over the last few weeks.
Yeah, 2 years up.
And that's that's not coming down at all.
No.
So, which is obviously the market saying, well, hang on, you can drop rates, but there's a risk premium in there as well, where
of course
something's got to give.
Something's got to give.
So, but time will tell on that. But yeah, just from an equity perspective, there, it tells a story that if you're patient, you're going to get a pretty good return on your money.
Yeah, there's a massive construction boom happening in the States. I've just got some numbers for 2025, 136 factories, 78 processing plants and 199 warehouses. Now that's under construction now, or have been constructed in the final phases of 2025. So this is starting to increase the volume. And 26, you've got the data centers, you've got all of those componentry as far as infrastructure build outs. It is absolutely on fire.
Yeah, there's plenty happening in the data centre space.
Oh, yeah.
All right, big start to the year. We'll keep an eye on things and we can touch base again next week.
I look forward to it.
Great, thanks, Pete.
Thank you, Andrew.
And that's the trading.com weekly market update.